Maybe you should focus on getting us coffee instead of playing businessman intern. My name is Adrian Blackwood. I'm 23 years old, and I've been working as an unpaid intern at Meridian Capital Group in Chicago for 8 months. The woman who just dismissed me like I was some overeager college kid fetching lunch orders is Victoria Sterling, 34, the firm's head of acquisitions with an expensive MBA and a corner office she inherited through family connections. She has no idea that I'm sitting on a portfolio worth $47 million, carefully built through cryptocurrency investments I started making when I was 16. I was standing in the hallway outside the conference room at 7:30 p.m. on a Friday, holding a stack of financial reports I'd been analyzing all week. The office was nearly empty, except for the cleaning crew and a few senior partners burning the midnight oil on deals. I'd stayed late because I wanted to contribute something meaningful, something that went beyond organizing files and scheduling meetings. Victoria walked past me carrying her designer handbag and a look of exhaustion that comes from spending all day in meetings about deals she barely understood. "Still here, Adrian?" she said, stopping in front of me. "Don't you have parties to attend or video games to play?" I looked up from the merger analysis I'd been reviewing, just finishing up some research on the Hartwell Industries acquisition. I think there might be some issues with their debt structure that... She glanced at the papers in my hands like I was showing her children's drawings. "Right. Well, maybe you should focus on getting us coffee instead of playing businessman, intern. Leave the real analysis to people who actually understand finance." I didn't respond. I'd spent the entire week diving deep into Hartwell's financials, uncovering discrepancies that the senior analysts had missed. But explaining complex financial modeling to someone who relied on her team to do the actual thinking seemed pointless. After she walked away, I stood there for a moment, staring at the 47-page analysis I'd written. Every calculation, every risk assessment, every strategic recommendation had come from late nights of research that I'd done on my own time. The portfolio I'd built was still growing, compounding daily in cryptocurrency and index funds that most of these Wall Street veterans still didn't understand. But Victoria Sterling and the rest of Meridian Capital Group were about to learn something important about underestimating the quiet intern who brought them coffee. Victoria Sterling came from old Chicago money, the kind that bought corner offices before earning them. Her father, Charles Sterling, had been on Meridian's board for 15 years before securing her position as head of acquisitions. She'd graduated from Northwestern with an MBA that cost more than most people's houses, but her understanding of complex financial instruments remained disappointingly shallow. I'd watched her fumble through presentations, relying heavily on PowerPoints that her assistants prepared and analysis that junior analysts like Tobias Chen actually performed. Meanwhile, I'd been trading cryptocurrency since I was a sophomore in high school. While my classmates were playing video games, I was studying blockchain technology, learning about market volatility, and making calculated investments with money I'd earned from freelance web development. By the time I graduated from the University of Chicago with a finance degree, my portfolio had grown from $3,000 to over $40 million. I'd maintained my position through multiple market crashes, reinvesting profits into index funds and emerging tech stocks that most traditional investors ignored. Meridian Capital Group was a mid-tier investment firm that specialized in corporate acquisitions and private equity deals. They managed approximately $2.8 billion in assets and employed 120 people across their Chicago headquarters. I'd applied for their internship program, not because I needed the experience, but because I wanted to understand how traditional finance worked from the inside. My academic credentials were strong: 3.9 GPA, summa cum laude, president of the investment club, but I deliberately kept my personal wealth private. Victoria's team consisted of 12 people, including 4 senior analysts, 3 junior analysts, 2 research assistants, and 3 administrative staff. Most of them were competent professionals who did solid work, but they were handicapped by Victoria's tendency to dismiss innovative approaches that fell outside her narrow understanding of conventional finance. She preferred safe, traditional investments that generated predictable returns, avoiding anything that required genuine analytical thinking or market intuition. The irony was that my intern analysis often caught details that their expensive Bloomberg terminals and professional research services missed. But because it came from someone who officially existed to fetch coffee and make photocopies, it was automatically dismissed as amateur speculation. The day-to-day reality at Meridian was a masterclass in institutional inefficiency disguised as sophisticated finance. I arrived every morning at 6:30 a.m., 90 minutes before anyone else, and spent the early hours reading financial publications and analyzing market movements in regions that most of the senior staff ignored. By the time Victoria arrived at 9:15 a.m. with her $8 coffee and designer briefcase, I'd already identified 3 potential opportunities and 2 risk factors that would affect their current positions. My official responsibilities included organizing files, scheduling meetings, preparing conference rooms, and yes, getting coffee. But I'd gradually taken on more substantive work by volunteering for research projects that nobody else wanted to handle. Last month, I'd spent 40 hours analyzing regulatory filings for a pharmaceutical merger, discovering that one of the target companies had hidden liabilities that would cost the acquiring firm approximately $180 million over the next 3 years. When I'd presented my findings to Tobias Chen, the junior analyst officially assigned to the project, he'd been impressed enough to include my analysis in his final report. Victoria had presented those findings to the client as if they were her team's original discovery, never mentioning that an unpaid intern had done the actual detective work. The client saved millions by restructuring the deal terms, and Victoria received a $50,000 bonus for her exceptional analytical insight. Meanwhile, I watched her struggle with basic financial concepts during team meetings. She'd nod thoughtfully when senior partners discussed complex derivatives, but I could see in her eyes that she was lost. Her strategy involved agreeing with whoever spoke most confidently and then delegating the actual work to people who understood what they were talking about. She'd built her reputation on taking credit for other people's analysis while contributing nothing more than her family name and networking connections. The most frustrating part was watching genuinely talented people like Tobias Chen and Sarah Rodriguez, one of the senior analysts, constrain their thinking to fit Victoria's limited understanding. They'd developed brilliant strategies for emerging markets investments, but Victoria would reject them as too risky or outside our expertise, preferring to stick with safe, low-yield acquisitions that generated predictable commissions. I started keeping detailed notes about these missed opportunities, calculating what the firm could have earned if they'd followed more aggressive strategies. I'd started building my cryptocurrency portfolio during my junior year of high school when Bitcoin was still trading under $4,000. While my classmates were worried about college applications, I was studying white papers for emerging blockchain projects and learning about decentralized finance protocols that traditional investors had never heard of. My initial investment was $3,000 that I'd saved from building websites for local businesses, but I'd approached it with the same analytical rigor that I later applied to my university coursework. The key was understanding that cryptocurrency wasn't just digital gambling. It was a fundamental shift in how financial systems could operate. I'd spent hundreds of hours learning about smart contracts, liquidity pools, and yield farming strategies that generated returns far exceeding anything available through conventional investments. By my senior year of college, my portfolio had grown to $12 million, and by graduation, it had reached $35 million. But I'd also invested heavily in traditional markets, using cryptocurrency gains to build a diversified portfolio of index funds, tech stocks, and real estate investment trusts. I understood that sustainable wealth required multiple income streams and risk management strategies that went beyond any single asset class. My goal wasn't just to get rich. It was to build generational wealth while learning how institutional finance worked. Meridian Capital Group represented everything I found fascinating and frustrating about traditional investment firms. They had access to sophisticated tools, extensive networks, and institutional knowledge that took decades to develop. But they were also constrained by conservative thinking and hierarchical structures that prevented innovation. I joined their internship program because I wanted to understand how they made decisions, how they evaluated opportunities, and why they consistently underperformed compared to more aggressive investment strategies. The stakes were higher than anyone realized. Meridian was struggling financially, though they hadn't made this information public yet. Their last 3 major acquisitions had performed below projections, and several key clients were considering moving their portfolios to larger firms that offered better returns. Victoria's conservative approach was slowly bleeding the company's competitive position, but she was insulated from consequences by her family connections and the board's reluctance to admit they'd made a hiring mistake. I'd been documenting these problems for months, building a comprehensive analysis of why the firm was failing and what could be done to fix it. What nobody at Meridian understood was that my personal investment portfolio had grown to $47 million by the time Victoria made her coffee comment. This wasn't luck or family money. It was the result of 5 years of disciplined analysis, strategic risk-taking, and understanding market movements that most traditional investors ignored. My cryptocurrency holdings alone were worth more than Victoria's annual salary, and my diversified portfolio generated passive income that exceeded what most senior analysts earned. But the real leverage came from something even more valuable: knowledge. I'd spent 8 months studying Meridian's operations from the inside, understanding their client relationships, their decision-making processes, and their financial vulnerabilities. I knew which deals were profitable, which clients were considering leaving, and which strategies were failing. More importantly, I understood exactly why they were struggling and what it would take to turn the company around. Through my analysis, I discovered that Meridian was severely overvalued based on their current performance metrics. Their client retention rate had dropped 23% over the past 18 months, primarily because competitors were offering better returns through more aggressive investment strategies. Their operational costs were excessive, largely due to overstaffing in administrative roles and underperformance in revenue-generating positions. Most critically, they were sitting on approximately $180 million in underperforming assets that could be restructured or liquidated to improve their balance sheet. I'd also identified their cash flow problems. Meridian's quarterly reports showed steady revenue, but their accounts receivable had been growing steadily, indicating that clients were slow to pay fees or were disputing charges. Their fixed costs were too high relative to their variable income, making them vulnerable to market downturns or client departures. Based on my calculations, the firm was probably worth about 40% of their stated valuation. The most interesting discovery was that Charles Sterling, Victoria's father, held a controlling stake in the company through a complex web of investment vehicles and board positions. But financial pressures were mounting, and I'd noticed increased discussion about potential restructuring or sale to a larger firm. The Sterling family's wealth was largely tied up in Meridian's performance, making them vulnerable to the same market forces that were affecting the company. All of this information was sitting in my private files, documented and analyzed but never shared with anyone at the firm. The warning signs had been accumulating for weeks before Victoria's coffee comment, but I'd initially attributed them to normal workplace politics rather than a systematic campaign. It started with small changes: meeting invitations that stopped including me, research projects that were reassigned without explanation, and conversations that ended abruptly when I approached. I'd assumed it was natural office dynamics until I began noticing the patterns more carefully. 3 weeks ago, I'd submitted a detailed analysis of emerging markets opportunities that could have generated significant returns for Meridian's clients. The report had taken me 40 hours to complete, including financial modeling, risk assessments, and strategic recommendations. Tobias Chen had been enthusiastic about the findings and promised to present them to Victoria for consideration. The next week, I'd seen Victoria presenting nearly identical recommendations to the senior partners, claiming them as her own strategic insights. When I'd asked Tobias about it, he'd looked uncomfortable and explained that Victoria preferred to present all external research as team efforts. 2 weeks ago, Sarah Rodriguez had mentioned that Victoria was questioning my presence in the office during after-hours periods. Apparently, Victoria had expressed concerns about security protocols and suggested that interns shouldn't have unsupervised access to client files. This was particularly ridiculous since I'd been working late nights for months without any issues, and my analysis work often required access to the same databases that junior analysts used regularly. Last week, I'd overheard Victoria talking to Charles Sterling during one of his visits to the office. They were discussing optimization opportunities and streamlining operational efficiency. But the conversation stopped when they noticed me organizing files nearby. Victoria had given me a sharp look and suggested that I might be more useful working in the administrative department rather than the research division. The pattern was becoming clear. They were systematically excluding me from meaningful work while taking credit for my contributions. But there was something else happening that I didn't fully understand yet. Victoria had been asking unusual questions about my background, my family's financial situation, and my long-term career plans. She'd seemed particularly interested in whether I had other opportunities lined up after the internship ended. I started paying closer attention to office conversations and email patterns, documenting what I observed. The breaking point came on a Monday morning when I arrived at the office to find my desk cleared out and my computer access revoked. Victoria was waiting for me with 2 security guards and a legal document that she slid across the conference table like she was serving a subpoena. The document was titled Confidentiality Agreement Amendment and contained language that essentially prohibited me from discussing anything I'd learned during my internship with anyone outside the company. "Adrian, we need to discuss some changes to your role here," Victoria said, her voice carrying the artificial warmth that people use when they're about to deliver bad news. "There have been some concerns raised about the scope of your activities and your access to sensitive client information." I read through the document carefully. Hidden in the legal language was a clause that would transfer ownership of any intellectual property, analysis, or strategic recommendations I developed during my internship to Meridian Capital Group. Essentially, they wanted to claim ownership of all the research I'd done while simultaneously removing me from any position where I could continue contributing. "This seems to suggest that you're terminating my internship," I said, looking up from the papers. "Not terminating, restructuring. We're moving you to a more appropriate role in our administrative department. You'll be working with our facilities management team on organization and logistics projects." I felt something cold settle in my stomach. "And if I don't sign this?" Victoria's smile became sharper. "Well, we'd have to reconsider whether this internship is the right fit for your skill level. We've received feedback that you might be better suited for opportunities that don't require access to confidential financial information." The threat was clear. Sign the document and accept demotion to filing clerk, or be fired with a negative reference that would damage my future opportunities. They were betting that I needed this internship more than they needed me, that I'd accept humiliation rather than risk my career prospects. What they didn't know was that I'd been documenting everything, every analysis I'd written, every meeting I'd attended, every strategic recommendation I'd made. I had detailed records of my contributions and clear evidence that Victoria had been claiming credit for my work. More importantly, I had $47 million in liquid assets, and absolutely no need to tolerate this kind of treatment. I stood up from the conference table and looked directly at Victoria. "I'll need some time to review this with my attorney." Her confident expression flickered slightly. "Your attorney?" "Yes. I'll have a response for you by tomorrow morning." That evening, I called my lawyer, Elena Vasquez, who specialized in employment law and intellectual property disputes. I'd retained her services 6 months earlier when I'd started making serious money in cryptocurrency, wanting to ensure that my financial affairs were properly structured and protected. Elena was sharp, experienced, and had a reputation for aggressive advocacy on behalf of clients who'd been wronged by larger institutions. I explained the situation and sent her copies of all the documentation I'd collected during my internship. This included the original analyses I'd written, email threads showing how my work had been appropriated, and the confidentiality agreement that Victoria wanted me to sign. Elena reviewed everything overnight and called me back the next morning with news that changed my entire perspective on the situation. "Adrian, they don't have a legal right to claim ownership of work you did as an unpaid intern," she explained. "Intellectual property developed by unpaid interns typically belongs to the intern unless there's a specific agreement transferring ownership. Since you were never paid and never signed a comprehensive IP assignment, your analysis and recommendations are your property. But more importantly, Elena had done some research into Meridian's financial situation that revealed information I hadn't discovered on my own. The firm was in worse shape than I'd realized. They'd been late on several loan payments, their credit line was nearly maxed out, and they were facing potential bankruptcy if they couldn't improve their cash flow within the next 6 months. "There's something else," Elena continued. "Meridian is at serious risk of bankruptcy within 4 months if they can't restructure their debt. The Sterling family is trying to find a buyer, but their valuation expectations are unrealistic given their current performance." This changed everything. Victoria wasn't just trying to exploit my work. She was desperately trying to salvage a failing company using any available resources. The confidentiality agreement was designed to prevent me from revealing their financial problems while they searched for solutions. I spent the next 2 days researching bankruptcy procedures and corporate acquisition strategies. If Meridian was going to fail, I wanted to understand exactly how that process would work and what opportunities might emerge. The plan that developed was audacious but entirely feasible. Instead of fighting for credit for my internship work, I could position myself to acquire the entire company if it went under. The next morning, I returned to Meridian's offices with Elena Vasquez and a response that I'd prepared overnight. Victoria was waiting in the conference room with Charles Sterling and their corporate attorney, clearly expecting me to sign their modified confidentiality agreement and accept the demotion quietly. The atmosphere was tense but confident on their side. They believed they held all the leverage. "Adrian, I hope you've had time to review our proposal," Victoria began, sliding a pen across the table toward me. "We're eager to move forward with this transition so that everyone can focus on what they do best." I opened my briefcase and removed a document that Elena had prepared. "Actually, I have some concerns about the company's financial stability that I'd like to discuss." The silence in the room was immediate and uncomfortable. Charles Sterling's face tightened. Victoria looked confused, and their attorney suddenly became very alert. "I'm not sure what you mean," Victoria said carefully. "I've been analyzing Meridian's performance metrics during my internship," I continued calmly. "The client retention data, cash flow patterns, and debt obligations suggest some significant challenges ahead." Charles Sterling found his voice. "You don't have access to that kind of financial information." Elena opened her briefcase and removed several documents. "Mr. Blackwood's analysis is based on publicly available information and observations made during his internship. He's identified some concerning trends that might interest potential investors." I watched their faces as the implications sank in. They weren't just trying to control me, they were trying to prevent me from revealing information that could damage their already precarious position. "What exactly are you suggesting?" their attorney asked. "I'm suggesting that Meridian's problems are more serious than you've acknowledged publicly," I replied, "and I'm prepared to provide alternative solutions." Victoria's voice was sharp. "What kind of solutions?" Elena slid a bank statement across the table showing my portfolio balance. The number at the bottom was $47,847,392. Victoria stared at the document like it was written in a foreign language. "This can't be real." "Mr. Blackwood has been building his investment portfolio since high school," Elena explained. "He's particularly skilled in cryptocurrency and emerging markets, areas where traditional firms like Meridian have struggled to compete." The room erupted in angry voices and accusations, but I noticed that their attorney was taking notes and asking Elena for documentation of my financial claims. The offer was implicit but real, and they were beginning to understand that this wasn't a bluff. The meeting ended with threats of legal action and demands that I leave the premises immediately, but I could see uncertainty in their eyes. Over the next month, I implemented a strategy that Elena and I had developed to position myself advantageously if Meridian's situation deteriorated further. The key was understanding that their biggest vulnerability wasn't their debt load. It was their client relationships, which depended on consistent performance and confidence in the firm's stability. I started by conducting discreet outreach to 3 of Meridian's largest clients, companies that I'd researched extensively during my internship. Using my personal network and Elena's professional connections, I arranged informal meetings where I presented alternative investment strategies that could significantly improve their returns. I wasn't trying to steal their business immediately. I was simply demonstrating that better options existed. The first client, Hartwell Industries, was particularly interested in the emerging markets analysis that I had originally prepared for Meridian. When they asked why their current investment firm hadn't presented similar opportunities, I explained that traditional firms often missed innovative strategies due to conservative institutional thinking. Within a week, Hartwell had requested a formal review of their investment portfolio with Meridian. The second client, a pharmaceutical company called Nexus Therapeutics, had been frustrated with Meridian's performance for months, but hadn't found a suitable alternative. I presented a cryptocurrency diversification strategy that could hedge against market volatility while generating higher returns than their current conservative approach. They were immediately interested and began asking pointed questions about why Meridian hadn't suggested similar strategies. The third client was a family trust that managed $400 million in assets. I approached them through a mutual connection and demonstrated how blockchain technology could provide better transparency and control over their investments. They were particularly impressed by my ability to explain complex financial concepts in clear, practical terms, something they felt was lacking in their current relationship with Meridian. None of these clients made immediate changes, but all three began requesting more detailed performance reports from Meridian and expressing dissatisfaction with their current returns. This created exactly the kind of pressure that a financially stressed firm couldn't handle. Meanwhile, I'd begun establishing the legal framework for my own investment fund, Blackwood Capital, with Elena's help. We filed all the necessary regulatory paperwork, established proper legal structures, and began building the infrastructure needed to manage institutional clients. My track record of successful cryptocurrency investments provided credibility, and my detailed knowledge of traditional finance demonstrated that I could handle complex portfolio management. The final piece of the strategy was patience. I knew that Meridian's cash flow problems would likely force them into serious trouble within months, and I was prepared to wait for the right opportunity. The collapse happened faster than I'd anticipated. 7 weeks after my confrontation with Victoria and Charles Sterling, Meridian Capital Group filed for Chapter 11 bankruptcy protection. The announcement sent shockwaves through Chicago's financial community, partly because the Sterling family had maintained their public confidence right up until the filing, but mostly because the firm's actual financial situation was far worse than anyone had realized. The bankruptcy filing revealed that Meridian owed $34 million to various creditors. Their client retention rate had dropped to 61%, and their liquid assets were insufficient to cover operational expenses beyond the next 30 days. 3 major clients had terminated their contracts within 3 weeks of each other, creating a cascade effect that made reorganization impossible. Charles Sterling was forced to step down from the board, and Victoria's position was eliminated entirely as part of the restructuring process. The local business press covered the story extensively, with several articles noting that Meridian's problems had been building for months, despite public statements about growth and expansion. One particularly detailed analysis in the Chicago Business Journal mentioned that the firm had consistently missed opportunities in emerging markets and cryptocurrency investments that could have provided the diversification needed to weather recent market volatility. I watched Victoria's LinkedIn profile change from head of acquisitions at Meridian Capital Group to seeking new opportunities in financial services. Several mutual connections mentioned that she was struggling to find positions at comparable firms, partly because her track record at Meridian had been exposed as largely fabricated during the bankruptcy proceedings. The bankruptcy court scheduled an asset auction for 8 weeks after the filing, giving potential buyers time to complete due diligence and arrange financing. Elena had assembled a team of forensic accountants and legal specialists to ensure that my bid would be comprehensive and legally bulletproof. We discovered additional problems that hadn't been disclosed in the public filings, including regulatory compliance issues and potential client lawsuit exposure, but these actually strengthened my negotiating position. 3 other bidders emerged during the auction process: 2 larger investment firms looking to acquire Meridian's client list, and a private equity group interested in liquidating their real estate holdings. None of them were prepared to take on Meridian's full operational obligations or maintain the firm as a going concern. The bankruptcy judge scheduled the auction for a Tuesday morning in November. I arrived at the courthouse wearing a simple black suit, carrying the documentation that would change everything. I purchased Meridian Capital Group for $18.7 million at the bankruptcy auction, approximately $6 million less than the firm's estimated liquidation value. The other bidders had focused on acquiring specific assets rather than the entire operation, which meant I faced minimal competition for control of the complete company. The judge approved the sale within 48 hours, and I officially became the owner of the firm that had dismissed me as just an intern 5 months earlier. My first decision as owner was to retain most of the talented staff who had been constrained by Victoria's management style. Tobias Chen became my head of research, Sarah Rodriguez was promoted to senior partner, and several junior analysts received significant responsibility increases. The administrative bloat that had plagued the company was eliminated, but the people who actually generated value were rewarded with better positions and equity stakes in the restructured firm. Blackwood Capital, as I renamed the company, focused on the innovative investment strategies that Meridian had consistently ignored. We specialized in cryptocurrency portfolio integration, emerging markets analysis, and technology sector investments that traditional firms avoided. Our client returns improved dramatically, with several portfolios outperforming market benchmarks by significant margins during our first year of operation. Within 18 months, we had recovered all 3 major clients that had left Meridian during its final crisis: Hartwell Industries, Nexus Therapeutics, and the family trust that managed $400 million, all returned with expanded portfolios and long-term contracts. Our assets under management grew from Meridian's final total of $1.7 billion to over $4.2 billion by the end of our second year. Victoria Sterling eventually found a position at a smaller firm in Milwaukee, earning approximately 40% of her former salary in a role that involved actual analytical work rather than management responsibilities. Charles Sterling retired from finance entirely, selling his remaining investments to cover personal debts that had accumulated during Meridian's collapse. When business journalists asked me about the acquisition, I kept my explanation simple. Sometimes the best way to change a company's culture is to change its ownership. Competence and innovation matter more than family connections or traditional credentials. The real lesson was quieter but more significant. Success in finance, like most industries, depends on understanding markets, managing risk, and creating value for clients. These skills can be developed by anyone willing to put in the work, regardless of their age, background, or official title. Dismissing someone based on their position rather than their capabilities is a costly mistake that compounds quickly in competitive markets. Today, when interns join Blackwood Capital, they're evaluated based on their analytical skills and strategic thinking, not their ability to fetch coffee. Some of our most valuable insights have come from team members who might have been overlooked at traditional firms. Respect and competence, as it turns out, are excellent